Welcome to Money Chat Now, brought to you by Investor Schooling. Hey, you could take a free class this Thursday night by going to investorschooling.com, signing up, and you will learn about stock options, you will learn about real estate, you will learn about the stock market, and you'll even get to meet me. Isn't that cool? I think it's cool. I want to let you know I'm your host, Larry Steinhouse, and today we're going to be discussing some great stuff as usual. First of all, we're going to talk about the recovery stock sliding on the Delta variant pressure. Robinhood stock, I call that one. Man, it's climbing. Bitcoin and crypto ETFs we're going to be talking about. Pending home sales drop in June. Household debt drops. And we have some notable earnings, including Nikola, Alibaba, Marriott, Prudential, and Occidental Petroleum. And of course, we're going to discuss some of my favorite stock tips. So I want to talk a little bit about the recovery stock sliding. So Royal Caribbean today came under pressure and slid more than 2% in the beginning of the day with concerns about rising COVID cases. Now, this is interesting because we talked about this yesterday. I actually said this, I think it was one of the last things I said at the end of the show, was that there was an announcement that came on that said, hey, COVID cases, the Delta variant, blah, 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 is, everybody's concerned, blah, blah, blah. And I said tomorrow, some of these recovery stocks, I said AAL and CCL and RCL would probably drop, and they did. Now, this is really cool because for me, this was an absolute buying opportunity. I thought this was the time to buy. Now, I was looking for AAL to go below 20, and it did. I was looking for CCL to go below 21, and it did. And RCL, it didn't quite hit my numbers yet. I'd like to see it below 70, and that would be a play for me. But hey, I was watching these things pretty well today, and I added to some of my positions. Some of the airlines were hit as well, and of course, as we talked about, AAL was hit. Matter of fact, let's even pull up the chart for AAL because in the end of the day, it actually recovered, which is pretty exciting that it recovered. So remember that, it was down somewhere, well, it was down actually as low today. It was low as 1931 was the low for the day. And if you think about this, 1931 for the low for the day, it opened at 2008. And if you remember yesterday, I think I mentioned it actually, I don't know if I mentioned it, but right before the show started yesterday, AAL hit below 20. My alert on my phone went off, and I'm sitting here and I'm buying AAL because I knew it was a good play. I was buying the stock options for it. I knew it was a good play. And my producer Pedro is going, hey, pay attention to what we're doing. We're about to start. I'm like, I don't care. I'm buying some stock options. So I did buy some stock options yesterday at right below 20, which is probably right where it is right now. And today, again, the low was 1931, and today's high was 2008, which is where it opened. And everything looks like it's recovering, which is fantastic for me. I also want to talk about real quick, while we got it, we might as well talk about them real quick. We've got Carnival. So Carnival also had a nice movement today. It went down as low as 2052, and it closed at 2142. Now, this could have been a great play if you're a stock options trader. 1 point in a stock options trade is a fantastic play. So that could have been a great play as well. And of course, I also want to take you over to, if I can, I want to take you over to the other one, which was RCL. And RCL, although I didn't buy it, I didn't play it today, RCL actually finished down 99 cents, but it was as low as 71.79. I was still looking for below 70, and that didn't happen, so I didn't actually get in there. But again, those are all buying opportunities. Even these numbers are buying opportunities. AAL to me is an absolute buying opportunity right now. I think it's going to rock. It's funny, as we sit here, I'm watching the RCL chart while we talk go up. So you can see it's actually a great play. Great play. Oh, you know what? I want to talk about real quick while it's in front of me, I want to talk about JNUG, because JNUG is a stock that it's actually a fund, and it's hovering in this range. I'd like to see it if you want to get into it. I'd like to see it below 75 if you want to get into it. But hey, at 78, it's not a bad play. I think it'll probably go to 85. And if you're a stock options trader, that's a great place to be, but not necessarily it's a dangerous move because JNUG moves a lot. In fact, I'll tell you, when I saw covered calls a lot on JNUG because I really like the play. It's just a fantastic play. All right, let's go into some of the news today. And let's talk a little bit about, wait, you know what? I still got to go to Robinhood. I'm sorry. Let's go to Robinhood while we're here because I just noticed it on my screen. Wow. I called this one last week. I said it was a great IPO. It was fantastic. At 38, it was a great IPO. It dropped as low. I think it dropped as low as, I don't know. I think it dropped as low as 33 at one point, and I actually grabbed it at 36. Now, you can't buy stock options on it yet, so obviously I'm not buying stock options. I actually bought the shares. I bought it at 36. It's at 47 right now, and that's in 5 days. That's a fantastic play. It's up over 20% in 5 days in a stock that that's fantastic numbers. I like this stock, and if I were you, I would definitely look into it. At 47, which it is right now, it might be a little high. I think it's going to have a little bit of resistance at 50. But let's see, it may work out really well for you if you buy it, hold on to it. I like the idea of buying it now before the stock options come out. You buy it now before the stock options come out, and then what you're going to do is you're going to sell covered calls on it, and so what? So the stock gets taken away. I think I'm up 25% on it. So if I'm up 25%, I sell the covered call, and it gets taken away. Who cares? I probably made 35% on my money just because I sold the covered call as well. So also another fantastic play. And that's why I liked it. All right, I'll tell you what. We're going to go run over to a commercial real quick, and then we're going to talk about the next topic, which is all about Bitcoin and crypto ETFs. We'll see you in a minute.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from 2 Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse, and we've been talking about some great stuff that happened today in the stock market. A couple of things really quick that we talked about. We talked about the fact that Robinhood stock rock and rolled. Woohoo! I did really well, and I'm loving it. We also talked about the fact that some of the recovery stocks, such as AAL, such as CCL, RCL, all went down today. Actually, they didn't even close that far down, but they went down today and they were buying opportunities, and I picked up a couple of them, and I thought it was a great buy, and if I were you, I keep looking at them. All right, let's go talk about a little bit about crypto ETFs. Now, we all know, at this point, everybody knows what crypto is. Crypto is, and I'm going to say it, and I'm going to piss a lot of people off, it's some imaginary currency that no one knows or understands or does anything with, and it's kind of wild stuff. All right, all you Bitcoin fans just got mad at me, and that's fine. It's okay with me because I actually have some crypto. I don't have Bitcoin. I have Ethereum, and I have Dogecoin because I just thought it was so cool to have Dogecoin. Don't know why. I just have it. And I'm doing pretty well with it, actually. I'm up a little bit, probably up 20% since I bought it, which is fine. And again, it's just odd stuff. Now, there's a bunch of companies out there who want to jump on this bandwagon, and we know Coinbase was one of them. And we're going to talk about Coinbase stock in a little while because it's one of my favorite picks. But Coinbase was one of them. Now there's some companies out there that are ETFs, and the ETFs want to create funds that you can trade crypto. So all these brilliant crypto guys that you see on Facebook want to start creating funds and trade crypto. All right, I'm being funny. But the idea is they want to start trading crypto, and they want to start making money, and these funds can pay pretty well. Now there's gold funds. We just talked about JNUG a little while ago. There's gold funds, there's silver funds. Now they want to talk about crypto funds. However, the head of the SEC says crypto assets need a lot more regulation before they can move forward. So that's what we're stuck on. We're stuck on the fact that it's kind of scary. I mean, Gary Gensler, the SEC head of the SEC, said the same thing. He said this asset class is rife with fraud, scams, and abuse in certain applications. So really, what's happening is they believe, and I believe too, that there's a lot of manipulation in cryptocurrencies, a lot of manipulation in crypto. So that's what the problem is. They want to be able to regulate it. They want to make sure that it's safe. They want to make sure that you, the consumer, are protected. We know how that's been working out lately with some of the things that the government is forcing us to do. However, they want to make sure that there's some safety. So basically, they need some additional congressional authorities to prevent transactions, products, and platforms from falling between regulatory cracks. And Gessler addressed several aspects in his speech. If you want to go look it up, you can go look it up. It's Gary Gessler, who is the head of the SEC, and he's saying that crypto is kind of dangerous, and they want to make sure they can regulate it. Whatever. All right, let's go into talk a little. Oh, by the way, there was a ETF, ProShares. It's an ETF called ProShares. Now, I'm not sure if it's actually being traded yet or if it's just sitting there. But if you look it up, you can look at the symbol BTCFX. No need for us to look it up, but it's BTCFX. It's not moving, so I'm not sure if it's actually released yet or if it's just sitting there waiting to happen. But that was a Bitcoin futures fund. So Bitcoin futures are already being traded. All right, let's talk a little bit about pending home sales. Wow. If you were thinking about selling your house in January or February, obviously you couldn't even sell it because the world was shut down. Real estate agents weren't even allowed to show houses. That was a nightmare. Then all of a sudden it opens up, March, April, it opens up, and every house on the market had bidding wars. It was unbelievable what had happened. If you tried to buy a house, you couldn't buy a house. You were outbid by people who had cash. If you wanted to get a loan, they didn't want to talk to you. If you wanted an FHA loan or a low down payment loan, forget it. They had people lining up, no inspections. House prices was going crazy. And there were so many contracts. I mean, look, I happen to be a licensed real estate agent also, and people were calling me like crazy. Hey, could you find me a house? I couldn't even find people houses. I didn't even want to do it. It was actually a lot more work because of how many houses I had to show people that they would continuously get rejected for anyway because nobody took their offer. So pending home sales actually dropped in June, and there wasn't that many signed contracts. The interesting thing is in May, the prices were up 17% compared with May 2020, 17%. So if you own a house, your house went up almost 20% for the year. That's phenomenal. Now, I own a lot of properties, and I'm very happy about this. And, you know, when you own properties like I do and they go up 20%, you can afford to buy really cool jackets like this one. All right, so some of the mortgage rates also moved up slightly higher at the start of June, and that also added to, you know, affordability issues. So because mortgage rates went up slightly, but they only went up slightly. I mean, I don't understand this. Sometimes I look at this and it amazes me. And some of you people out there who are at my age or more remember the Jimmy Carter years when mortgage rates were 17%, 18%. I remember getting a mortgage for 13%, and I thought I was lucky when I got that mortgage for 13%. So when your mortgage rates go from 4.25% to 4.5%, who cares? I don't get it, but hey, that's just the way it is. All right, here's another interesting thing too. Now, at investor schooling, I teach people a lot of times. I teach people about getting credit cards, having available credit ready, and also making sure that that you have money if you need it, if a good deal comes along. And we talk about doing that with credit cards. But here's an interesting thing that you should know is that household debt jumped the most in 14 years to nearly 15 trillion in the second quarter. So it jumped the most in 14 years to nearly 15 trillion in the second quarter. So they're basically saying a lot of people use their credit cards or other debts. However, that's what the headline says. Then when you look into it, it actually says that most of the debt, believe it or not, most of the debt was due to mortgages. So people were taking mortgages. So it wasn't that bad. But this is something you should know. So, and here it is. So over the past 4 quarters, mortgage originations have totaled close to 4.6 trillion, amounting to 44% of all outstanding home balances. That's why there was so much debt, because it was all new homes. Most of it came from mortgage originations, both initial purchases and refinances, which have been on fire as the Federal Reserve has kept benchmark borrowing rates anchored around historic lows. And yes, it is pretty low. Now, here's where it is. Credit card balances increased by 17 billion, while auto loans were up 33 billion. And student loan debt, figure this one out, student loan debt actually decreased for the period, falling 14 billion to 1.5 trillion, as forbearance programs have kept education-related balances in check. What? The money didn't go away. They still owe the money, but they're reporting that because they didn't have to pay for it, it kind of disappeared temporarily. whatever. I'm one of the few people who is on the right side that says we really should forgive these student loans. These are the biggest ripoffs on the planet. All right, let's talk about forbearance. The median credit score, and this is a really interesting thing too. The median credit score for newly originated mortgages was 760, with 71% of all borrowers having a score of over 760, right, whatever. The share of mortgages moving to delinquency totaled just 0.4%. All of you people out there who are real estate investors are waiting for the bottom to drop out because of all the people who have missed their payments. Guess what? Ain't gonna happen. That's not going to be the reason that's going to cause all of the stress that you think it's going to cause. It's not going to be the reason that houses are going to go down in price. That's not going to happen if shares of mortgages moving to delinquency total just 0.4%, a record low. While the 0.5% share of mortgages that were 90 days or more past due also set a new record among the ongoing forbearance programs. So they're saying that, yes, there was a lot of mortgages that went past 90 days, but most of them were in the forbearance program, so they didn't pay them. If you're familiar with the forbearance program, you don't have to do anything to qualify for it except say, hey, I just don't want to pay my mortgage for 90 days. And that's how the forbearance program worked. It was that great. So some people said, hey, listen, I'm going to shelf my money for 3 months. Some people said, hey, I'm going to take a break with it. Some people are going to be really hurting when they have to start paying their mortgage back again or start making their mortgage again, but it's either here nor there. The fact is that there's not that many people who did it, and because of that, in a percentage-wise, and because of that, the big I'm going to lose my house kind of thing, and we should go look for new houses and start talking to people who are behind in their mortgage is probably not going to happen. So I would say, yeah, look, it's really not that big of a deal. All right, I want to talk really quickly about what's happening in the stock market, where we closed today. So the Dow Jones closed at 35,116, which was just under a new record. But the cool thing was, if you're watching today, we were down pretty low. We were actually down for a while. For quite a bit, we were down for a while. So the day's low was 34,714, and the day's high was 35,120, and the record high is 35,192. So we're kind of looking, I wouldn't be surprised if we see a $36,000 Dow sometime in the next 2 weeks. I wouldn't be surprised, but at the same time, I wouldn't count on it. You know what I mean? That's basically what I'm trying to say is it could happen, it might happen, but it doesn't have to happen. But 36,000 is definitely on its way. We're not hitting, I know everybody thinks the whole world's coming to an end, and I had a little brief moment when I went through that in March, or I think it was March, and I got to tell you, it's not happening. This economy is just going to keep rocking and rocking and rocking. The unemployment thing, we talked about the unemployment yesterday, and unemployment, it's over. I mean, there's going to be, almost everyone's going to be working that wants to work, and there are people out there that are looking to hire people, and they can't hire people. And people are going away. Everything is great. The economy is going to be fine for quite a while. How? I don't know. I mean, the economy has been going on too long, too good, too long. But hey, when it goes bad, believe me, on this show, I will let you know that it's going bad or it's about to go bad. All right, why don't we go out for another commercial, and we'll come back and we'll talk about some of my favorite picks.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors, and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way, and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
Welcome back. Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and today we've been talking about some interesting topics such as recovery stock slide on Delta variant pressure. We talked about Robinhood stock. Ooh, what a great play that was. Oh, I love that one. We talked about Bitcoin and crypto ETFs. We talked about the fact that pending home sales have dropped. We talked about the fact that household debt has jumped. And let's talk little bit about some notable earnings. Let's see what we have time on here about some notable earnings. I want to talk about Baba's earnings. So Alibaba is a stock that I like. It's actually one of my favorite picks. I believe that every time it goes below 190, it's something to look at. If it hits 180, it's something to absolutely buy. But at 190, it still might be a play. I would go for it. Now, Alibaba, the pressure of Alibaba is, of course, on because of the Chinese crackdown on people making money. You know, the Chinese don't feel that their citizens are allowed to make money. So, you know, anyway, I'm rambling. But the idea is, you know, they're cracking down. But the earnings estimate was $2.22 per share, $2.22 per share, and it actually came in at $2.56 per share. But Alibaba didn't go up. It actually went down. Now, it was down for a little while. It was down pretty bad this morning, about 6 or 7 points down, and I was like, oh, I may have another buying opportunity here, because I have a bunch of it. And I was thinking I may have another buying opportunity, and sure enough, I didn't take advantage of it, and it didn't close that bad. It only closed down about 2.5 points, 2.7 points, and that'll be a nice play. Nikola, I love this. Nikola's a crazy story. I mean, we talked about Nikola last week, and Nikola, of course, the fact that Milton was indicted, and whatever. But Nikola, I'm still trying to figure out if they actually have a product. But they say that they're going to start delivering their product soon, and they actually said that they took less of a loss than normal. So I actually set alert on my phone for Nikola to go below 10, and if it goes below 10, I actually am going to seriously consider it. Marriott International, we're waiting for Marriott International's their earnings is today, and we're waiting for it. I don't think it happened yet. Oh, I'm sorry. Was it? No, it was before market. Marriott was before market, and let's see what Marriott did real quick, if I can find it. Oh well. Anyway, I think they did very well, only because, again, you know, it's a recovery stock, and anything that's a recovery stock, they have to be doing pretty well. Maybe they didn't do as well as they thought, but it went down a little bit, and not much of a big deal. All right. So, I'm really hoping you guys are enjoying this show. We're having a lot of fun making it. You know, look, we built this entire studio for you. Don't you like to show them the whole studio? Show them the outside whole studio, because, you know, we built this studio just so you guys can enjoy it. I mean, you know how much money it costs to build a studio like this? So I'm really hoping you'll enjoy it. I'm really hoping that you're going to share and like our show. And tomorrow, I'm going to let you know that we'll be discussing some more notable earnings. We'll be discussing more trends in the stock market and all the news relative to making more money. Hey, if you like to make money, this is the show to watch. If you don't like to make money, then go outside and do whatever it is you do that you don't make money on. But here, we're going to teach you how to make money. All right. I wanted to thank you again. And of course, from time to time, I own some of the assets and options discussed in the show. The opinions discussed in the show is solely mine, and no one asked me to make them. I thank you for watching Money Chat Now. We look forward to your continued support, and please again like and share this, and we'll see you soon.